Ethiopian Airlines flew passengers on a Boeing 737 MAX plane on Tuesday, but opinions are split regarding its first flight using the model since a crash nearly 3 years ago. In March 2019, a flight to Nairobi crashed 6 minutes after takeoff from Ethiopia's capital Addis Ababa, killing all 157 passengers and crew. The accident followed another incident 5 months earlier when the same model crashed in Indonesia, killing 189 people. The accidents exposed a problem with the system on the plane, and the model was grounded worldwide, costing Boeing some $20 billion. Some relatives of those killed in the Ethiopian Airlines crash were angered by the decision to resume flying the MAX. Tom Cabau lost his 29-year-old brother George in the crash.
Personally, it's a decision that I'll never fly in a MAX. And certainly, if I find myself booked into a MAX, I'll have to cancel that flight.
Tuesday's demonstration flight had journalists, diplomats and officials on board and was initially scheduled to reach neighbouring Kenya. However, it remained within Ethiopia due to poor weather, officials on board said. Ethiopian Airlines said the decision to resume flights came, quote, after intense recertification by multiple regulatory bodies. The country is among the last to return the 737 MAX to service.
Santander surged back into the black in 2021. Over the year, it saw net profit hit just over €8.1 billion, or almost $9.2 billion. The year before, it saw a loss of about the same amount. In the fourth quarter alone, its profit surged eightfold compared to a year ago, when it was hit by restructuring charges. The Eurozone's second biggest bank says it was boosted by a strong performance in the US and UK. It was also able to release about $846 million that it had set aside to cover health crisis-related costs. Santander said that reflected a general improvement in the economies where it operates. The bank has been focusing on cutting costs in Europe, where low interest rates have crimped its income. It's now trying to expand in emerging countries, where it hopes to see faster growth than its core European markets.
All three Wall Street indexes closed higher on Wednesday, a fourth straight session of gains after a turbulent start to the year. The Dow Jones Industrial Average rose more than 0.5%, while the S&P 500 gained close to 1%, and the Nasdaq gained exactly 0.5%. The gains were aided by upbeat earnings from Google parent Alphabet, whose stock finished up more than 7% on Wednesday, pushing the search giant closer to a $2 trillion market valuation. Jim Bruderman, vice chairman of 1879 Advisors, says the collective earnings season and upside surprises should reassure investors.
The important thing about earnings, and certainly this quarter, but really looking out 2-3 quarters in advance, is that forecast earnings, expected future earnings across the S&P are at record highs right now. And that kind of earnings momentum and earnings growth, I think provides a strong downside protection as we look forward in terms of what's going on in the markets and what Fed tightening means to everything we're looking at today.
Taking the air out of big tech's tires, though, was a forecast from Facebook parent Meta Platforms, which posted results after the bell. The company said it was expecting current quarter revenue below Wall Street's expectations. Shares fell over 20% in after-hours trading. Strong earnings and a positive forecast reported by Advanced Micro Devices pushed its stock up more than 5% on Wednesday. The positive sentiment extended to other chip makers, too, including NVIDIA, Qualcomm, and Micron Technology. But PayPal plunged Wednesday after it forecast first quarter revenue and profit well below expectations, dragging down other financial tech stocks and payment firms, including Block, Affirm Holdings, and SoFi Technologies.
No relief for Eurozone shoppers, and a mounting headache for central bankers. New figures Wednesday showed inflation in the region jumping to a fresh record high of 5.1% in January. That surprised economists, who had predicted a fall. The rise was partly driven by soaring energy costs, which had been widely expected. But prices for some foods also jumped by 5%. Put together, that means a big increase in everyday costs for households. Now the European Central Bank faces a dilemma. Policymakers there have repeatedly said that price rises should start to ease off. But there is little sign of that now, with inflation at more than twice the bank's 2% target. That could change the calculation on rates for bank chief Christine Lagarde. Analysts polled last month didn't see any prospect of a hike until the second half of next year. Now a growing number think rates will have to rise before then. For now, though, the ECB continues to insist that inflation is a passing phase. It points to muted growth in wages as one factor keeping prices in check. But with every passing month, the argument is getting harder to make.
Shares of Facebook and Instagram owner Meta Platforms plunged 20% after the bell Wednesday as the company missed on Wall Street earnings estimates and posted a weaker forecast. Meta forecast current quarter revenue in the range of $27 billion to $29 billion, below analyst expectations, as Apple's privacy features keep businesses from opting to advertise on social media sites. Meta's total revenue, the bulk of which comes from ad sales, rose to $33.67 billion in the fourth quarter. That beat analyst estimates. But net losses from Meta's Reality Labs, the company's augmented and virtual reality business, grew to $10.2 billion for the full year, up from $6.6 billion the previous year. It was the first time the company had broken out this segment in its earnings. Tech stocks fell broadly after the Meta announcement, with Google parent Alphabet down 1.3%. Twitter and Pinterest were both down 10%, and Snap down 20%.